Welcome back to my channel, everyone. Thank you for tuning into this video. I'm going to do a trade recap breaking down Tesla along with some market context and going over some high quality trading setups based off of supply and demand imbalances. Now, if you're new here, make sure to subscribe to my channel, drop a like on this video, and without further ado, let's get right into the first breakdown. Tesla was a big winner for me today. This was in the pre-market plan where it was a very simple plan. We had an upper trend line. We were forming a wedge. So I wanted us for price to get above the 860 to 862 zone, where I'm expecting a rally into the 868 supply. Key for more upside is to watch for the reaction of participants at the 868 zone. If we slice through it like butter and the demand is strong, we're going to break all-time highs and have a nice move up on our hands. So here's the chart on Tesla. Here's the exact wedge that I was looking for. Now, it's a very simple technical analysis pattern. It's when we consistently make lower highs and we also make higher lows. Now, we don't know which way we're going to break out of. That's the whole idea of finding momentum and finding which participants are basically getting rewarded, which participants are going to start getting a little anxious if the stock is not moving in the direction. So that's where market context comes into play. And if you see a pattern like this, there's no guarantee if it's going to go up or down. If we do break out, there's no guarantee that it's also going to continue going up. You have to understand market context. But today we were gapping up. This is why Tesla was my main watch today. And if we go to an intraday chart, I'll show you exactly where I entered, why I entered, and the whole thought process behind this. Now, I posted this as well on my Instagram story this weekend on Saturday. I said Tesla is getting ready to make a big move soon. If you aren't following my Instagram, I will link it in the description below. It is definitely a very good resource. I post daily trading recaps along with very good trading tips and tricks. Like I said, the link to this will be in the description below. Definitely worth a follow. But going back to Tesla, here's the upper trend line. So today we were gapping up above it, and in pre-market, I come up with all my pre-market plans. Depending on if we're gapping up, gapping down, are we flat, are we balanced, are we imbalanced, and overall just looking at the whole outlook of volume. Obviously, you could see from 7 a.m. Eastern time to when the market opened, volume was pretty elevated in the extended hours session compared to what we normally do see. We were holding above the trend line, so I was waiting for the market to open. Now, if I pull up my E-Trade where you could see my orders, my entries and exits, pull it up over here. I got in Tesla at 9.35 and I got out at 9.45. I got in at 31 bucks and 45 cents and got out for a full fill at $42 even. So a little over 10 bucks on this trade per contract, which is not bad at all. You buy one contract, you're making $1,000. But the whole thesis behind this trade was, again, above that trend line. Now, from a 5-minute chart, you're not going to really see it. It's all about market context and seeing how the candles develop. The candles will paint you the picture. Sometimes you can see the picture before it's physically painted, if you understand what I mean by that. So I saw the market open up and immediately we sold off. You could see it from this lower wick. And this lower wick is signifying that buyers were pretty interested. We came down to test this under the trend line, but buyers were pretty responsive and took us higher. So then this candle opened or closed pretty strong. Volume was pretty strong. And then the next candle opened, and this is when the 9.35 I entered pretty much right at the start of this open candle. And usually what I've noticed is that opening candles on a 5-minute chart tend to have a little bit of a push higher. So I entered this trade. I was risking about 6 or so points, which to the low. Most likely would have sold a little bit before the low, depending on how the market was reacting to the stock. But if I go to a 1-minute chart, you're going to see exactly when I entered. I entered here, and then we got a quick push up. The sellers on the offer completely got wiped away. This thing, I don't know if it was a glitch in ThinkorSwim, but this thing jumped up about 3 or so points in a matter of a second or two. So I saw that. My contracts were up like $2 really fast. So I was like, I'm going to hold on to this a little longer. I was ideally targeting the 868 supply. So we came up, and this is exactly why I don't look at a 1-minute chart. If you look at a 1-minute chart, we pulled down from 867 all the way down to 862. So about a 5-point drop to the downside. And on a 1-minute chart, this thing looks like the trend's going to start to change. We're going to start selling off. But if you go to a 5-minute chart, which is why I prefer it, this thing was super bullish the whole day long. So then we moved up, and again, going back to the pre-market plan, I said if we slice through it like butter and demand is strong, we're going to break all-time highs and have a nice move on our hands. Supply zones are just areas that we want to see the reaction from participants. No one knows where the market's going to bottom out. No one knows where the market's going to, call a top. You have to understand it all depends on context and reading what the participants are doing. Are they agreeing? Do they find this price fair value, or do they find this price unfair value? And in this case, we were slicing through this supply. Buyers were very, very strong. As you can see, we had a strong push up. And during the strong push up, my contracts were absolutely ripping. So if you get on the right side of Tesla, you could definitely make a lot of money with it fast. But we got a quick move up to 875. And then at the 875 area, I use whole and half numbers, quarters, and even, half 850, 875, 900, just whole numbers as psychological levels where I look to see the participants maybe looking to take profit, maybe looking to hold value and create another leg higher. So we got to the 875 area, and if you go to a 1 minute chart, you're going to see price stalling out. So this is the only thing that I did not like, and this is what I want to improve on. Again, my trading is not perfect. I'm always looking for ways to improve, and I'm just, journaling this along the process. So maybe you guys could relate and understand some things that, maybe I could do better and you all could do better as well. So we came to the 875, 876 area, and we started stalling out. So at 9:45, I exited my full position right here. I did not mean to exit full position. This happened last week as well. I fat fingered my sell. I flattened the whole position. I wanted to keep a couple contracts open, maybe 75%, just in case this thing wanted to rip, because obviously demand was super strong. We were moving up. We were moving up on somewhat of lower volume. But again, if you need to practice patience, look at a 5 minute chart. There was not one reason to sell up here. This thing had 6 candles straight to the upside. We broke above all-time highs, and look at the volume down below. Let me remove this oval. The strongest amount of volume on the whole day. Volume will tell you the story. Volume and price. If we get huge volume like this and there's no follow through to the upside, price most likely is going to reverse. So the next candle, we had even higher volume. We started moving up higher, and then we finally broke above the 900 level. And above 900 is exactly where we failed. So a lot of people that missed this rally to the upside are going to see 900 and they're going to be like, oh, I want to break out. I want to buy the breakout above 900. This thing had not one pullback. If you miss the move, it's better to A, get in on a pullback, or B, completely avoid, because if you buy at the top, you're going to get completely dumped on right here. So my whole lesson with this is focus on a 5 minute, be patient. You had no reason to sell Carmine until we got to the 900. This thing rallied. First sign of somewhat of bearish momentum on a 5 minute was all the way up here. You could have locked in, another $15 on the contracts for an even better of a trade. If you're still sticking around and you're enjoying and learning something from this video, I'd greatly appreciate it if you would just pause the video for 3 seconds, smash that like button for me, and then let's get right back into it. Next thing I want to break down is the S&P 500. If you've all been following me for a while, I chart the ES future and trade either SPY options, I'll trade SPX, or I'll even trade the future itself. It's the most liquid market, so it's my favorite thing to trade with the supply and demand strategy. But if I just maximize this, let's get a little context first. So this was in the pre-market plan. We had a supply zone which rejected in the overnight session. We were making lower highs, making lower lows. We opened up and volume was kind of weak. We were kind of chopping around. This was also the same supply which we rejected, where we double topped on, what was this, last Thursday? So this is a very strong level, the 3851 supply zone. A supply imbalance is where there's orders defending by the supply by the sellers, unfilled orders waiting to be filled once price hits this area. If supply is greater than demand, we're going to drop lower. We also had a couple of demand zones lower that would have propped the stock higher once we came to test this level. But a couple things here to get a little context. As the market is developing, I post intraday commentary in my Discord channel. So I said that we had major resistance supply in this area. I'm watching for price to fail to play SPY puts. It's very choppy and balanced so far. So let's see if we can move out of this balance and have new buying, or if we're met with responsive sellers who will reject supply. So again, this goes back to tying into my last example. The market is just to try to understand which participants are active, which participants are responsive, which participants are going to get rewarded, which participants are underwater, where are people stop losses, where are people trading based off of emotion. So let's completely ignore this supply zone. Let's say that we don't have it yet. We never traded at it. When the market was open for 45 minutes or so, we're completely balanced. We're moving in a 10 or so point range. So very, very tight compared to what we've been seeing. So there's no trade here. Now, this brings me again into what I posted on my Instagram this weekend. Let me see if I can pull it up here. So my edge fits my personality. It requires a large amount of patience and discipline. I prefer entering the market when others are trading based off of emotion. Supply and demand imbalances give me where I want to be active. They are my advertiser to price. And price and volume itself, they're the most leading indicators, tell me when I want to be active. So whenever I don't have my where and whenever I don't have my when, my advertiser and my validator, my edge isn't present and I'm a spectator. I sit on my hands until both are present, then I take the trade. Only way you're going to make money in the market is if you have your edge, you trade your edge, which is the execution part, then you're going to get results, win or loss, and in the long run, if you respect your risk, obviously you're going to have profits. So that's just a little message. So at this point, I'm sitting on my hands. I'm in the Tesla trade. Really wasn't watching this that much the first 15, 20 so minutes. But at this point, I'm getting a little more interested in SPY puts, especially that we're coming into and close to the 3851 area. Did I know we were going to reject as hard as we can? We did. No. Even this candle was bullish. We had a downtrend line. If we go on to a higher time frame, we were making lower highs every single time. So not only did we have supply, but we also had downtrend resistance. So this candle opened, then the next candle we started stalling out, and we were kind of getting a little choppy, consolidating. So I wanted to wait for 15-minute confirmation just so I had a little extra gauge to respect non-volatility and just to respect on how balanced the market was. But if we go back to a 5-minute chart, we did break this minor little trend. We did break the demand in this area or so, and then we started selling off violently. Now, this was at the same time, supposedly news was dropped. I can't really find the news. Looked everywhere. Supposedly, if it was about Biden and the stimulus talk, but then I heard about Biden COVID travel bans. If you know the news that was released around 10:30, 11 o'clock Eastern, let me know in the comments below. Really had a hard time finding it, but the market absolutely got obliterated from this supply zone at 3851. This was our key level that we were watching. Sold off about 50 or so points from this level. Two things you have to pay attention to. Yes, we have demand, but was there a sign of buying? Again, if you go back to my example, price and volume tell me when I want to be active. It's my validator to entering. Did we have any type of validation right here that buyers are present? No. Did we have any validation down here that buyers are present? No. Only thing we had was increasing volume. Again, when move comes down, you want to see volume increase and price have a hard time moving back up. You want to see it stall out. In the next candle, we had the highest amount of volume for the day, and this was at the last demand zone that we had in the pre-market plan at 3795. Now, if you understand, if you've watched my volume analysis video, whether you've taken my course or seen me talk about volume before, high volume where price cannot continue moving lower is a sign of absorption, and it's a sign of reversal. The next candle, we had a very strong candle up here. Now, my buying and selling volume is telling me that there was heavy sell pressure at this candle. And now what you're going to have is very much underwater shorts in the market. Price comes up, and you have to understand now that these shorts that price is coming up are either going to stop out, so they're going to have to buy to cover, which is going to squeeze price even higher, or these shorts are going to bag hold a little bit. But now I know that they're underwater down here, that if we do come back down, it's very important for the buyers down here to defend that area, for price to continue going higher, or for the sellers to get rewarded for price to go even lower. So fast forward a little more. This thing absolutely reversed. Very nice end of day, or pretty much all day afternoon, rally from this zone. And for all the GameStop fanatics, again, I've been told members this morning, I'm going to put you all in timeout if I see you trading this. I don't want anybody taking a loss on it. It's very overcrowded, meaning there's so many people that want to long this. There's so many people that want to short this. Again, everybody knows about this. I had my uncle who has no clue about stocks call me and said, what's going on with GameStop? So this is a very overhyped and crowded type of trade. Can it go up? Yes. Can it go down? Yes. But it's a complete gamble. There's zero edge in it. And when there's no edge, I put this again, I told everybody, when there's no wedge, don't trade it. You're going to lose. You're better off going to the casino and gambling. So we came up and then we completely lost all of its gains. Imagine if you bought up here, you got completely, smoked. These aren't small moves. The high to low is about a 100-point drop. So, try to avoid things that are getting overcrowded and hyped up, because you could definitely, you're definitely gambling at that point. AMD was one in the pre-market plan as well. Let me pull up my Discord here. So we had to play two scenarios, a bull and a bear scenario. We had supply and we did have demand. I was bullish as long as we were above and we held value above the 94.42 supply zone. If I go to a little bit of a higher time frame, we were holding above, we were basing. So if you go to a smaller time frame now, you can see that we came down and did test this zone again, and we did bounce. But a failure to stay above the high and break the high is a bearish sign. At one point, this thing did look bullish, but it was hard to be super bullish when the S&P had a major resistance at the 3851 level that I just showed you all. So we did come below. We had somewhat of a head and shoulders. We had a left shoulder, a head, and a right shoulder. And we finally broke below. And this thing dropped right into our gap demand zone, and then this is where the lower day was. Same exact pattern. The lower day was when the S&P hit low, and we kind of grinded up on lower volume throughout the rest of the day. What else do we have? We have Apple. Now Apple broke out of a wedge, the same exact wedge that we had on Tesla, but on a smaller time frame. And on Apple, we're making lower highs. We're also making higher lows. On Tesla, we broke out to the upside. On Apple, we broke down to the low side, and this is a high quality trade. I mean, if you go back to the S&P 500, this is at the same time we're rejecting supply. Apple starts breaking down out of this wedge. We're at all-time highs, so zero downside pressure at this point. We sell off, and then this thing dropped, 8 or so points. Look at the volume. Highest volume, no follow through. This thing ripped, had an engulfing candle to the upside, and just like the market kind of chopped its way throughout the whole overnight session. So I think I'm going to wrap it up here. If you're sticking through the end of this video, drop a like for me, please. Subscribe to my channel. If you enjoyed it, you learned something, it would mean a lot to me. So I'll see you all at the next video.